Right. So we have started with the chapter on the SEBI LODR, that is regarding the audit committee and the corporate governance. Why it is called as audit committee and corporate governance? Actually, audit committee is a part of it. But because it is such an important part of it, that in the name of the chapter itself, they've written the audit committee and the corporate governance. And because out of corporate governance, one of the requirement is also what? That the company needs to constitute an audit committee. And in that, we studied the applicability of the LODR regulations. Then the report on corporate governance has to be submitted to the stock exchanges in the format specified by SEBI within 21 days from the end of each quarter. This report is required to be signed by the compliance officer or the chief executive officer of the listed entity. And then the auditor needs to issue a certificate that whether the company has complied with the code on corporate governance or not, right? Whether the company has complied with the corporate governance or not. And then we started our discussion regarding the first point, which was regarding the composition of the board of directors, right? So it says it should be an optimum combination of the executive and the non-executive directors. Non-executive directors at least 50%, at least one woman director. Top 1,000 listed entities, at least one independent woman director should be there, right? Then after that, if the company is having outstanding superior right equity shares, then at least 1/2 independent directors. Chairperson is non-executive, regular, not a promoter, then 1/3 independent director. In all other cases, 1/2 independent directors are required, right? Then what does it say? Once a particular director is appointed, it says the approval of the shareholders has to be taken in the general meeting, in the next general meeting, or 3 months, whichever is earlier. But if you want to appoint such a person as a managing director, whole-time director, or a manager who was earlier rejected by the shareholders, what does it say? Then the prior approval of the shareholders will be required, right? And again, in the notice of the meeting, the detail, explanation, justification of the nomination remuneration committee, okay, why this person should be appointed as a MD, WTD, or a manager should be given. A person who has attained the age of more than 75 years, if he is to be taken as a non-executive director, what does it say? A special resolution is to be passed in the general meeting. Then a person, if top 2,000 listed entities should be having not less than 6 directors. And then we said a person, he cannot be a director in more than 7 listed entities. A person, he cannot be a director in more than 7, he cannot be an independent director in more than the 7 listed entities. And then also we said if you are a managing director, whole-time director, or a manager, then you cannot be an independent director in more than 3 listed entities, right? So there we said 7, 7, and 3, right? So this is up to what we have already discussed regarding the composition of the board of directors, right? This is what we have already discussed regarding the composition of the board of directors. Now let's get into the further part of the discussion, which is regarding the obligations with respect to the employees, including the senior management, the key managerial personnel, directors and promoters. So, again, this heading becomes an MCQ. Okay, are these obligations only applicable to the board of directors and promoters? No, they are also applicable to the employees who are the senior management and the KMP. So senior management, KMP. Then it says the directors and the promoters. So these obligations are applicable to all of them. Right, then how many meetings of the board of directors to be conducted in a year? It says at least 4 times in a year with a maximum time gap of 120 days between any 2 meetings. And what is the quorum for this meeting? Top 2,000 listed entities, 1/3 of its total strength, or 3 directors, whichever is higher, including at least 1 independent director present. And participation through video conferencing or through any other audio visual means will be counted for the purpose of such quorum. Okay, right? So if we try to prepare a chart over here, right, first point which I write over there is regarding the board of directors. And what do I write regarding the composition of the board of directors over over there. What is the composition? At least 50% should be the non-executive directors. At least one should be the woman director. Top 1000 listed entities, at least one should be the independent woman director. If the company is having outstanding superior right equity shares, then at least one half should be the independent directors. If the company is having the chairperson as the non-executive regular, not a promoter, then what does it say? At least one third shall be the independent directors. Person more than 75 years to be appointed as the non-executive director, special resolution is required. Then the approval of the shareholders is to be taken within 3 months or the next general meeting, whichever is earlier. Then it says any director who was earlier, any person who is to be appointed as a managing director, whole-time director, right, who was earlier rejected, then it says the prior approval of the shareholders will be required, and in the notice you have to give the details, right? So these are a few points regarding, right? And then also it says that top 2000 listed entities, you need to have not less than the 6 directors, not less than the 6 directors. Okay, right? So this is one point over here regarding the composition of the board of directors. Then we studied regarding the meetings of the board of directors. What is the meetings of the board of directors? Not less than 4 times in a year, with a time gap of not more than 120 days between any two board meetings. Is it clear to everyone? Right. Then we talk about the quorum, right, for the board meeting. What does it say? For top 2000 listed entities, one third of its total strength or 3 directors, whichever is greater, right? One third of its total strength or 3 directors, whichever is higher, with at least one independent director present, with at least one independent director being present. So, right, that's the quorum for the meetings of the board of directors, right? That's the quorum for the meetings of the board of directors. And it says attending through audio visual means will be counted for the purpose of the quorum. Participation through video conferencing will be counted for the purpose of the quorum. Is it clear to everyone till now? Yes. So have we completed, are we doing our discussion regarding the first set over there, which is regarding the board of directors? Okay. Now let us look into some other points regarding the board of directors. What did I just tell you? Okay, once I am a director in a company, can I be a part of the various committees of the board? Can I be a part of the various committees of the board? Okay. Can I be a director in more than one company also, listed entity? Yes, I can be a director in up to 7 listed entities. Is it right? Right. So I can be on the board of the different companies, listed entities, and I can also be on the board of unlisted entities also. Okay, unlisted, there is no restriction. For restricted, for listed, it says there is 7 listed entities. Okay, and all these different boards, will they be having the different committees? All the different companies on which I am on the board, will they be having the different committees over there? Yes. Will they be having the different committees? Yes. So now for these companies, say one, I am on the board of a listed entity. Here also I am on the board of a listed entity. Here I am on the board of a unlisted public company. Are you getting that? Right, then here I am on the board of a private company. Here I am on the board of a foreign company. Here I am on the board of a Section 8 company. Are you understanding that? Okay, right. And now there could be the committee membership or the chairpersonship. Either I can be the chairperson of any committee, or I can be a member of any committee, or I can just be a mere board member also. Are you understanding that? Okay. Now say the company is having audit committee, stakeholders relationship committee, risk management committee, and say the nomination remuneration committee. Okay, and say let me take the example of the audit committee and chairpersonship. So say I am the chairperson of the audit committee. Then this other company also audit committee, stakeholders relationship committee, risk management committee, nomination remuneration committee. Say they are there, I am the chairperson of the stakeholders relationship committee. Right, then third one, which is unlisted public company. Again again they have audit committee, stakeholders relationship committee, risk management committee, and the nomination remuneration committee. And say I am the chairperson of the audit committee and also the chairperson of the risk management committee, just as an example. And say for the second company also, say I am also a chairperson of the risk management committee. What example I am taking, you have to try to make an effort to understand that I am a chairperson, where I am the chairperson, audit committee, SRC, RMC, audit committee, and the RMC. Right. Then in case of the private companies, what does it say? Again, it could be having the audit. Yes, audit committee, they are not required to constitute. So say some other committee, like say the CSR committee is there, where I am the chairperson of the CSR committee, or they have some nomination remuneration committee or so. Some foreign company which is having an audit committee, right? Say again I am a chairperson of that audit committee over there. And say section 8 company, it is having an audit committee, and again say I am a chairperson over there, right? So in total, if you look over here, wherever I have put these circles, there I am saying that I am a chairperson. Okay, right. So now I cannot be a director in more than 7 listed entities. So anyways, out of these only 2 are listed entities, but others are the unlisted, private company, foreign company, section 8 company. Okay, one, there is a restriction on how many companies you can become a director in. You cannot become a director in more than 7 companies. You cannot be a director in more than 7 companies. And once you cannot be a director in more than 7 companies, you cannot be a chairperson of more than 5 committees across all the companies in which you are a director. And you cannot be a committee member of more than 10 committees across all the companies in which you are a director. Right? So across all the companies in which I am a director, I cannot be a chairperson of more than 5 committees, or I cannot be a committee member of more than 5 committees. But while counting this limit of 5 and 10, it says only the audit committee and the stakeholder relationship committee is to be considered. And that too, it is only to be considered of the public companies, whether listed or unlisted. And that means private company, section 8 company, high value debt listed company, foreign company. Are those committee membership and chairpersonship to be counted for the purpose of 5 and 10? No, those are not to be counted for the purpose of 5 and 10. What does it say? A director shall not be a member in more than 10 committees or act as a chairperson of more than 5 committees across all the listed entities in which he is a director. So I cannot be a director in more than 7. Within 7, I cannot be a chairperson of more than 5. Within 7, I cannot be a committee member of more than 10. Okay. Now, for the purpose of counting this limit of 10 and 5, it says the limit of the committees of the all public companies, whether listed or not, shall be included. Listed or not shall be included, and all other companies, including the private company, foreign company, high value debt listed entity, company under section 8, shall be excluded. So what will be included is only the public limited company, whether listed or not, and all other private, foreign, HVDL company under section 8, all of them will be excluded. And for the purpose of determination of the limit of the chairpersonship and the membership, for the membership and the chairpersonship, what does it say? Only the audit committee and the stakeholders relationship committee alone shall be considered. Right. So let us come back to my example. Okay. Right. So can anybody tell me, as per the provisions or the theory which we read in the book and the yellow colors which I have done over here, right, how many chairpersonship do I right now have? How many committee chairpersonship? Because I'm only taking the example of chairpersonship. How many I can have? 5. How many am I already having? Only intelligent students give answers, others keep quiet. Private company, not to be counted. Foreign company, not to be counted. Section 8 company, not to be counted. Okay. Listed company, audit committee to be counted. So 1. Now listed company or risk stakeholder relationship committee to be counted. But risk management committee, not to be counted. Are you understanding that? Yes. Then third, unlisted public company to be counted. But that only the audit committee, not the risk management committee. So currently I am the chairperson of how many listed entities? Chairperson 3. So more 2 can I still accept? Yes. Are you understanding? Which are to be counted? Only the public. In public also, list, it could be listed or unlisted. In that also, which is to be counted, only the audit committee and the stakeholders relationship committee alone is to be counted, and all other private company, section 8 company, HVDL, foreign company, those are not to be counted. Is everybody able to understand? Those who are saying 5 and any other number on earth coming to their mind, did you understand? Right, so only the public limited companies are to be counted, and within public only two committees are to be counted. Which two committee memberships? Right, the audit committee membership and the stakeholders relationship committee membership or the chairpersonship, only those are to be counted for the limit of 5 and 10. Yes, anybody, any of you, do you have any question? Generally students don't get this in the first go. Anybody has any question over here? All of you, have you understood this point over there? Okay, right. So now coming further, right, that what is the role of the board? Because what is the heading that we are discussing? Obligations with respect to senior employees, key managerial personnel, directors and the promoters. So what is the point over there? The board shall periodically review the compliance report of all laws applicable to the listed entity prepared by the listed entity, as well as the steps taken by the listed entity to rectify instances of non-compliance. So this will be very beneficial for us in SA 250 and of consideration of laws and regulation, because board needs to review the compliance report. So that means management is going to prepare the compliance report of how they are complying with the laws and how they are rectifying the instances of the non-compliances. Okay, right. Then what does it say? Independent director, he will be liable only for such acts of omission or commission which have been occurred with his knowledge, attributable through board processes, and which are done with his consent or connivance. Connivance is what? With his participation. Right, so I am an independent director. I am not involved in the day-to-day activities of the company. So for which acts I will be liable? Only for those acts which have been done with my consent or participation. You understand? No. Otherwise, who will be liable? The non-independent directors will be liable. Independent directors, for which acts of the company will he be liable? Only for those which are conducted with his consent or connivance. What is connivance? Participation, or where he or she had not acted diligently with respect to the provisions contained in the LODR. Okay. Right. Then what is the next important, interesting point over there? Appointment, reappointment, removal of an independent director of a listed entity shall be subject to the approval of the shareholders by a special resolution. Means independent director is equal to special resolution. And an independent director appointment, reappointment, removal of an independent director of a listed entity shall be subject to approval. So normally what approval is required? OR and GM. It has to be taken by the next general meeting or 3 months, whichever is earlier. But in case if it's the appointment, removal or the reappointment of an independent director, then what does it say? SR in GM, special resolution in the general meeting. I remember this point I have shown you in the corporate governance report of the Infosys. What did it say? That all the independent directors should meet at least once without the presence of the management and the non-independent directors of the company. And all the independent directors should strive to be present at the meeting. Right, so the independent directors of the listed entity, like Infosys, total how many directors they had? 8. Out of that, how many were independent? 6. So what did it say? The 6 independent directors should at least once meet independently, separately, without the presence of the non-independent directors and the members of the management. And all the independent directors shall strive to be present at such meeting. Right, are you getting that? Independent directors, at least one meeting. So this is again NEW. Right, and what are these independent directors going to do at that meeting? One, they will review the performance of the non-independent directors. And so once a group of ladies was sitting and then they were saying today, they were not talking anything today. So then they were wondering, okay, what happened? One uncle goes from there every day. He says, every day these ladies, they talk so much. Today, though, nobody is talking anything. So it says, today, why are you not talking anything? They say, today, everybody is present. Okay, right. So anyways, here what does it say? Now what are they going to talk about? They have to review the performance of the non-independent directors. Then they have to review the performance of the chairperson of the listed entity. And they also have to assess the quantity, quality and the timeliness of flow of information between the management and the board that is necessary for the board to effectively and reasonably perform their duties. Right? So they need to review the performance of the non-independent director, review the performance of the chairperson of the listed entity, taking into account the views of the executive, non-executive directors, and also assess the flow of information between management and the board. Right? Also assess the flow of information between the management and the board. Right? So this itself, can it be a small question in your exams? Or can they ask it in the MCQ? Okay, which of the following are the matters to be discussed in the independent director, in the meetings of the independent director? Right, so review the performance of non-independent directors, review the performance of the chairperson, and also look into the flow of the information, right? So we've already marked it as an NEW, right? Next one, senior management, because this obligation is applicable to whom? Not only to the directors, promoters, but also applicable to the senior management and the key managerial personnel. What does it say? Senior management shall make disclosures to the board relating to all material, financial and commercial transaction where they have a personal interest that may have a potential conflict with the interest of the company at large. Right? So senior management has to make the disclosure to the board for all material, financial and commercial transactions. Okay, right. Then an independent director. This is again a case study question in the exam. Right? This is again a case study question in the exam. An independent director who resigns or is removed from the board of a listed entity shall be replaced by a new independent director at the earliest but not later than 3 months from the date of such vacancy. Right? Earlier it said next board meeting or something. Now they have removed that. Now they simply put over there one thing. What is that? 3 months from the date of such vacancy. Right? So now company is having an independent director, and this independent director of the company, right, independent director, and this independent director of the company, either he has resigned or he has been removed. Then what does it say? The new independent director has to be appointed within 3 months from the date of such vacancy. Is it clear to everyone? Okay, right. Let me take an example that right now company is having total 10 directors. Out of total 10 directors, say 8 are independent directors. Right. Let me take an example. Company total number of directors 10. Out of that, how many independent directors are there? Say 8 independent directors. Okay. Say company is having outstanding superior right equity shares. That means how many independent directors should be there? At least 50%. So 50% means at least 5 should be the independent directors. Right now, how many independent directors they are having? 8 independent directors. Are you all with me? Okay. Now say one of the director resigned. One of the independent director, he resigned. So now how many independent directors does the company have? 7 independent directors. What is the total number of directors which the company now has? 9 directors. Now, even without filling the vacancy, is the company complying with the requirement of having independent director? Yes, then it says in such a case, it is okay if you don't fill the vacancy also. Because anyways you have extra. But say company had 5 independent directors. Now same situation if I change it and I say total directors are 10 directors and out of that 5 are independent director and one fellow resigned. Now, do they have to fill the vacancy within 3 months? Now they have to fill it within 3 months. Why? Because they cannot comply with the requirement of law otherwise. I hope you understand, everyone. Okay, right. So that is the second sentence. Provided that where a listed entity fulfills the requirement of independent director in its board, even without filling the vacancy created by such resignation or removal, as the case may be, the requirement of the replacement of the new independent director shall not apply. Are you understanding that? The requirement of replacement of the new independent director shall not apply. Are you able to follow, everyone? Okay, right. Then no independent director. So now what happened? One, you could either be removed or you could resign. Now it says if you resign, no independent director who resigns from the listed entity shall be appointed as an executive or a whole-time director on the board of the listed entity, its holding subsidiary associate. So now this is going to be our favorite word. What is our favorite word? LHSA. What is LHSA? Listed entity, holding subsidiary and associate. Right. So now you resigned as an independent director of a listed entity. You were an independent director of a listed entity. Now what does it say? You resigned as an independent director. Now what does it say? You cannot be appointed as an executive director or as a whole-time director. You cannot be appointed as an executive director or a whole-time director of the LHSA, listed entity, holding subsidiary or the associate, or on the board of a company belonging to the promoter group, unless a period of 1 year has elapsed from the date of the resignation as an independent director. So simple language, there is a cooling period of 1 year, right? There is a cooling period over there of the 1 year. You cannot be appointed as executive whole-time director. So, and no, non-executive director, can you be appointed? That you may be appointed, right? Or the board of the company belonging to the promoter group. So LHSA, and also what is coming over there is the promoter group. Are you able to follow this? Right? LHSA promoter group. What does it say? For 1 year, you cannot be appointed as a director. For 1 year, you cannot be appointed as a director. Right? So one provision, we need to be noticing it carefully over here. Are you all with me? What does it say? You resigned as an independent director of a listed entity. Now what does it say? You cannot be appointed as an executive director or a whole-time director of the LHSA or the promoter group for a period of 1 year from the date of such resignation. Is it clear? Whatever we studied in sentence, have we converted it into some flow chart or description over here? Yes, right. Now coming to the next one. The board should be having the succession plan. Okay, who next? You know, who next will be the director of the company? So succession for appointments to the board and the senior management, right? The board should be having the plan, satisfy itself that plans are in place for orderly succession for appointments to the board and the senior management. Okay, who will be the next senior management? Who will be the next director of the company, and so. Right, then there is this new concept again trending over there, NEW, D&O insurance. What is D&O insurance? Directors and officers insurance. Okay, you are the director, you are on the board of the company. Like I gave you this example over here. Okay, you are the director in the company, and now, you know, say the director of the company dies or so, right? So what does it say? The directors and officers insurance is to be taken. Which companies are required to take these directors and officers insurance? It says one, the top 1,000 listed entities, and second, the HVDL. Right, top 1,000 listed entities and the HVDL. Right, top 1,000 listed entities by market capitalization calculated as a 31st March of the preceding financial year shall undertake a D&O insurance for all their independent directors of such quantum and for such risk as may be determined. And you know, generally the premium for this D&O insurance is coming to 2 crore and 3 crore and all. Right, so it says independent director, right? He is an independent director. What if all of a sudden he is no longer a director in the company? It says you need to take a directors and officers insurance. Which companies need to take it? Top 1,000 listed entities. For which directors they need to take it? They need to take it for their independent directors. And again, the HVDL and a high value debt listed entity shall undertake the D&O insurance, again for all their independent directors for such sum assured and such risk as may be determined by the board of directors. Are you getting that, everyone? D&O insurance. Okay, so this is obligations with respect to employees, including the senior management, KMP, the directors and the promoters. So what was the first point we studied? Composition of the board. Then what is the second point we studied? The obligations with respect to. Okay, right. So now if I come to the question bank over here, right? One, they say refer to, discuss the issues of corporate governance. We are yet to come to that. Okay, now you have been appointed as an auditor of Real Limited, in which the total number of directors in the board is 9. As an auditor, state the points to be considered in verification of composition under Regulation 17 of the SEBI LODR. Right, so 6-mark question, May 2019, composition of the board of directors. Are you understanding that, everyone? Yes. Then if you look at question number 5, what is question number 5? The directors and the senior management of a listed company of which you are the statutory auditor want to know their obligations under the SEBI regulations in regard to the board or the non-executive directors. So mention any 5. So again, the obligations of the directors and the senior management. Did we just discuss that? Both the headings did we discuss? What was the first heading we discussed? Composition of the board, and second heading was the obligations of the directors and the senior management. Okay, and now coming to a case study over there. Kayask Limited is a public company which got listed on the BSE and the NSE and is amongst the top 500 listed entities based on the market capitalization. So if it is top 500, that means it is amongst the top 100 and top 1000 and top 2000 also. And as a student say, no, ma'am, it's not top 1000 or 2000. There it is written top 1000. Or if it is top 500, it's included in the top 1000 or 2000. Okay, right. Now, JP Bhuj and Company, a CA firm, has been appointed as the statutory auditor. Pankaj Bhuj was assigned as its audit engagement partner, and he was verifying the composition of the board of directors because of some changes in the same. The present composition of the board is as follows. There are 9 directors, out of which there are 4 non-executive directors and 3 are independent directors. The board has only 1 woman director and she is an executive director. Right? So what do you want to say? Right, there are 4 non-executive directors and 3 independent directors, right? So what do we say? Optimum combination of the independent and the yes, the executive and the non-executive directors. So at least 50% should be the non-executive directors. So your 9 divided by 2, 4.5. That means at least 5 should be the non-executive directors. Your only 4 are the non-executive directors. Are you understanding that? Right, then what does it say? The board is having 1 woman director and she is an executive director. No, can she be an executive director? No, it has to be an independent woman director for the top 1000 listed entities. Okay, and now Mr. Madhusudan Mehra has been appointed as a non-executive chairperson of the board. Right, so chairperson of the board is a non-executive director. Assuming he is regular and not a promoter, then how many independent directors will be required? Only the 3 independent directors. NRNP, non-executive, regular, not a promoter. Then how many independent directors are required? 1/3 independent directors. In this case, how many independent directors they are having? 3 independent directors. He is the brother-in-law of the managing director of the Kayask Limited. What did we say? Separate post. And a chairperson should not be related to the managing director or the CEO of the company. Which present composition, or whether the present composition of the board complies with the requirement of the SEBI LODR. Right? So one, it says the composition you need to write about that. Then relative includes brother-in-law, that is sister's husband is not included, right? What does it say? He is the brother-in-law of the managing director, right? So sister's husband is not included. Then in the given case, Kayask Limited is a public company which got listed and top 500 listed entity. The present composition is 9 directors, out of which 4 are non-executive, 3 are independent directors. The board has only 1 woman director and she is an executive director. In addition, oh my God, full question copied again. Right, as per SEBI LODR regulations, there should be at least 5 non-executive directors and 3 independent directors, as its chairperson is a non-executive director. Further, as the company is amongst the top 1000 listed entities, at least 1 independent woman director should be there on the board. Right, so do you understand 3 independent directors? Is that okay? Yes, but non-executive should be 5 and the woman director should be an independent director. Thus, it can be concluded that the present composition of the board does not comply with the requirement of the provision in SEBI LODR, as the woman director should be an independent director and there should be 5 non-executive directors. Okay, right. Question number 4. XYZ Limited has conducted 4 meetings in 1920, June 15, October 18, February 10 and June 10. Does it comply with the provisions of conducting the meeting? Right. So June, then July, 15 July, 15th August, and then the June 19 to October. So July, August, September and October. Is it within 120 days? Right? Do you check over there? Then October 18 to February. So November, December, January and the February. And then February to June. So March, April, May, June. Right? So if you look at the first meeting, what does it say? Right? As per LODR, what does it say? How many meetings? 4 times in a year with a time gap of not more than 120 days. In the given case, it has conducted the 4 meetings, right? In June, in October, in February, and again in June 2020. Right? However, that is June 15, October, February February and 10. It does not comply with the provisions because the time gap between the June 15 and the October 18, how much it is? It is more than 120 days. That is, it is 125 days. Right, so again you need to compute the same. Are you understanding question number 1 to 5? Yes. Next question, very direct and simple question over there. Elaborate under SEBI LODR, who is an independent director, right? Who is an independent director? And let us just see one more question over there. I'm coming little bit towards the end of the chapter, right, wherein we will find one particular yes, this particular question, which is question number 32. Are you all there? Yes, did you come to question number 32? Comment on the following in the light of certificate of compliance of conditions of the corporate governance to be issued under SEBI LODR for a listed company, one among the top 1,000 listed companies where the board consists of, oh my god, 20 directors with a non-executive director as the chairperson. One of the non-executive director has attained the age of 70 years. It is okay when a special resolution required for 75 years. So what does it say? There is no violation as a special resolution is required when he is more than 75 years. He is attained the age of only 70 years. One of the director is a director in 8 other listed entities. No, he cannot be a director in more than 7 listed entities. So there is a non-compliance. The managing director is serving as an independent director in 4 listed entities, of which one's equity shares are not listed on the stock exchange. Then it is okay. What does it say? Not more than 3 listed entities he can be an independent director. But here he is independent director in 4, but one is not listed. That means in listed he is only independent director in 3. Okay. Non-executive chairperson is the promoter of the listed entity, which has 9 independent directors. Right, so non-executive chairperson is the promoter. So non-executive but related to the promoter. Regular, you remember that, non-executive, regular, not regular, and related to the promoter. So if related to the promoter, then how many independent directors are required? 1/2 independent directors. Are you remembering that? Then how many? 1/2 independent directors. Here how many independent directors they are having? Only the 9 independent directors. How many independent directors they should have? At least 1/2 should be the independent directors. So it is not in compliance with the requirement. And one independent director has been serving as an independent director in 8 listed entities, of which equity shares are listed on the stock exchange. So again, no, he cannot serve as an independent director in more than, right, 7 listed entities. So there is a non-compliance as one of the director is an independent director in 8 listed entities, which is exceeding the limit of the 7 entities. Are you able to follow this question, everyone? Right, then coming to question number 31. Right, FCA, an associate chartered accountant, is one of the leading audit firm in Guwahati. The firm received an assignment to examine the compliance conditions of SEBI LODR of corporate governance of a listed entity having no outstanding superior right equity share. The firm has made the following observation. Mr. Fine, one of the director of the company, is also the chairperson of the stakeholder relationship committee, was also acting as the audit committee chairperson in 4 other listed companies as well as 1 private company simultaneously. So is stakeholder relationship committee to be counted? Yes. Is audit committee chairpersonship of listed company to be counted? Yes. But private company, is it to be counted? No, it is not to be counted. So is there any violation of the limit? No. So it need not be reported by the auditor. Are you able to follow it? Okay. Next one, the nomination. Okay, so now for this we need to study the nomination remuneration committee, and then again we need to study regarding the risk management committee, which we are yet to study. Are you understanding that? And again this question has a point regarding the audit committee. Okay, right, so when the time comes we'll come to those particular questions also. But are you getting that knowledge is power? We don't know which question will come and how they will make a question in the exam, right? But we need to know the provisions over there. Are you all with me? Yes, are you all with me over there? Composition and the obligations of the directors. Now coming to the next beautiful definition over there of an independent director. When I look at this definition of independent director, I think independent director, you need to get him from another planet only, or another galaxy or Milky Way or somewhere, from the stars you need to get him, because it says he should be absolutely independent, like not even a dust of knowledge non-independent should be there around him, and a completely independent. So first requirement for an independent director, question will come in the exam for 5 marks, definition of independent director. What does it say? Independent director means a non-executive director, or 100%. If he has to be independent, first thing on earth he should be the non-executive director other than the nominee director of the listed entity. And one, right? What is the first requirement? And see, everywhere they say whether you are a director or whether you are an auditor, integrity number one. You understand now? Whether you are the auditor of the company, in ethical requirement also, what is the first requirement over there? Integrity. And for director also, what is the first requirement if you want to become a director of a company? Integrity. Who in the opinion of the board? So again, you should not say that, yeah, I am a person of integrity. Board should think so, right? So who in the opinion of the board is a person of the integrity and possesses the relevant expertise and the experience, right? So who in the opinion of the board is a person of the integrity? Are you understanding that? What are we studying over here is the definition of the independent director. It has come in your exams for 8 marks. Now if it comes again, it will come for 4 or 5 marks. And recently this definition has been changed, right? So for you it is R raised to 10. Okay, right? So one, he is a person of integrity. Then second, he is or was not a promoter of the LHSA. Who is LHSA? Listed entity, holding subsidiary or the associate or the members of the promoter group of the listed entity, right? So who is a person of integrity, who is or was not a promoter of the LHSA or the members of the promoter group, who is not related to the promoters or directors of the LHSA. So who is not a promoter, who is not related to the promoters or directors of the LHSA. Then apart from receiving the director's remuneration, has or had no material pecuniary relationship. So next P is what? Pecuniary means what? Monetary. Had no material pecuniary relationship with the LHSA or their PD. PD is what? Promoters or directors during the 3 immediately preceding financial years or during the current financial year. Earlier this number was 2 preceding financial year. Now they've changed it to immediately preceding 3 financial years or the current financial year. Right? So what is this person? First P, he is a person of integrity. Second P, negative P. He is not a promoter or was not a promoter. Then he is not related to the promoter or the director. Then he does not have a pecuniary relationship with the LHSA or the promoters or directors during the 3 immediately preceding financial year or during the current financial year. Next one, none of his relatives. So now we come to the R. So first 3 points were for the P, and which were for the person of integrity, promoter and the pecuniary relationship. Are you understanding? First was promoter, person. Second was promoter. Third one was P, was for pecuniary. Now we are talking about the R. What does it say? None of whose relatives. Right? So if I want to become a director in a company, if I want to become a director, my relative should not be holding the security or interest in the LHSA, or should not be indebted to the LHSA or their promoters or directors, or should have given a guarantee or provided any provided any security in connection to the indebtedness of any third person. Is anything coming to your mind? 141 3D1, 141 3D2 and 141 3D3. So the disqualification which is there for the auditor is also for becoming the independent director of the company. If I want to be an independent director of the company, not talking about me I will talk later. Right now they are saying none of his relatives. Right? None of his relatives holds any security of or interest in during the immediately preceding 3 financial years or during the current financial year. Again, this is favorite. What is favorite? Immediately preceding 3 financial years or the current financial year. Immediately preceding 3 financial years or the current financial year. Immediately preceding 3 financial years or the current financial year. Are you able to filter out the common points over there? Right? What does it say? None of his relatives is holding any security of or interest in the LHSA during the 3 immediately preceding financial year or during the current financial year of face value in excess of 50 lakh. Right? So relatives can hold up to face value of rupees 50 lakh in the LHSA. In company law, auditor ke liye relative limit is 1 lakh. Here for director, if I want to become an independent director, my brother, how much of shares he can hold in the LHSA? Up to the face value of rupees 50 lakh or 2% of the paid up capital of the LHSA respectively, or such higher sum as may be specified. So if I want to become a independent director of Infosys, my brother should not be holding more than 50 lakh face value share of the LHSA of Infosys. Are you understanding that? Okay. Then if I want to become a director in independent director in Infosys, what does it say? My relatives, again say my sister, should not be indebted to the LHSA or their promoters in excess of the amount as may be specified. So they've not specified the amount over here. Right. Or what does it say? If I want to become a independent director in Infosys, my father should not have given any guarantee or provided any security in connection with the indebtedness of any third person to the LHSA or their promoters or directors for such amount, again during the 3 immediately preceding financial year or during the current financial year. And what does it say? None of whose relative. You know, before the A, B, C, D, what is the common sentence? None of whose relatives, for you to become an independent director, has had any pecuniary transaction or relationship with the LHSA amounting to 2% or more of the gross turnover or the total income. Right? So should not have any material transaction, pecuniary, monetary transaction or relationship with the LHSA amounting to 2% or more of the gross turnover or the total income. Right. Provided the pecuniary relationship or transaction with the LHSA or their PD, promoters, directors. So everywhere what they say, LHSA or the promoters or the directors in relation to points A to D above shall not exceed 2% of the gross turnover or total income or 50 lakh or such higher amount as may be specified from time to time. So what is the blanket limit over there? 2% or 50 lakh or such higher amount as may be prescribed. Right? Because then you say indebtedness is allowed as may be specified, guarantee is allowed as may be specified, then security up to face value of rupees 50 lakh is allowed, then any other pecuniary relationship up to 2% of turnover is allowed. So then it says, now what is the blanket condition? It says 2% of the total turnover of the gross turnover or total income or 50 lakh or such higher amount as may be prescribed. Are you getting that? Right. This is for whom? This is for the relatives. What are we studying? Definition of an independent director, person of integrity, not a promoter, relative is not a promoter, then does not have any pecuniary relationship, then none of his relatives. Now, neither he nor his relative. So not only my brother, sister, father, now me also. Are you understanding that? Now what does it say? Neither himself nor through his relatives holds or has held the position of a KMP or has been an employee of the LHSA or a company belonging to the promoter group. Again, what does it say? During the preceding 3 financial years in which he is proposed to be appointed as an auditor. Yes, proposed to be appointed as an independent director. Are you understanding that? So neither me nor my relatives. Now what does it say? Neither the director nor the relatives should be the key managerial personnel or has been an employee of the LHSA. So if my sister is the CEO of the subsidiary of Infosys, can I be appointed as an independent director of Infosys? No. That is what it says. Na? Neither me nor my relative should be the key managerial personnel or the employee of the LHSA or the company belonging to the promoter group in any of the 3 preceding year. However, in case of the relative who is an employee other than a KMP, the restriction under this clause will not apply. What does this mean? Okay, my brother is working as the software development department of subsidiary of Infosys. He's not working as a key managerial personnel. He's working in the software department, software development department of subsidiary of Infosys. Then can I be appointed as an independent director? It says yes, then you can be appointed. If relative is an employee other than key managerial personnel, the restriction under this clause will not apply, right? R raised to 10. If relative is a director, relative is an employee other than the key managerial personnel, the restriction under this clause will not apply. Then what does it say? Neither me nor my relatives. Earlier, who was in the picture? Only the relatives. Now who is in the picture? Me also and my relatives also. What does it say? Neither by himself nor through his relatives is an employee, proprietor or partner of the stat audit firm, company secretary firm, cost audit firm, legal firm or the consulting firm. Right, so say I am to be appointed as a independent director of Infosys. Right, independent director of Infosys. And now say Infosys, will it have its CA? Will it have its CMA? Will it have its company secretary? Will it have its legal firm? Will it have its consulting firm? Right, will it be associated with these different entities? Infosys, okay. Now what does it say? Neither me, director, or the relative. So neither me nor my relative should have been a employee or a partner or a proprietor of the CA firm or the CMA firm or the company secretary firm or the legal firm or the consulting firm to whom Infosys is providing the services. To whom they are providing these services to Infosys. That means what? I am a partner in PwC. Can I be appointed as an independent director of Infosys? No. My relative is an employee in a legal firm, and this legal firm is doing consulting work for Infosys. Can I be appointed as an independent director? No. So neither me nor my relative should be employee, partner, proprietor in the stat audit firm, cost accounting firm, the company secretary firm, legal firm or the consulting firm. Are you understanding? But for legal or consulting firm, what do they say? Allowed if it not allowed if it exceeds 10% or more of the gross turnover of such firm. So if the total receipts of the firm are 10 crore, if more than 1 crore is coming from Infosys, then it says not allowed. If 50 lakh is coming from Infosys, then it says still you can be appointed as an independent director. Are you getting that point over there? Neither by himself nor through his relative should be the key managerial personnel or the employee of the LHSA or the company belonging to the promoter group. Then neither by himself nor through his employee should be employee, partner, proprietor of the 5 firms. Are you understanding that? Then what does it say? Neither by himself nor through his relatives, holds together with his relatives 2% or more of the total voting power of the listed entity. Right, so again this is a separate case study in the exam. Independent director, what is the restriction on the voting power? Not more than 2% of the voting power. CA Pradeep is appointed as an auditor of Delicious Food Limited, a listed company, to audit the financial statements for 2021. Paid up share capital of DFL is 5.97 crore. While auditing director's remuneration, CA Pradeep observed that Srinivas Gupta has been appointed as an independent director. Srinivas Gupta is holding the shares of 8,95,500 in DFL and wife is holding shares of 2,98,500 in the same company. CA Pradeep raised an objection on the appointment of the independent director, but the other directors explained that holding of the shares by Srinivas is less than the prescribed limit. Hence, he is eligible to be appointed as an independent director. How will CA Pradeep deal with this situation and how will he report this issue? Right, so what does it say? An independent non-executive director should not be a substantial shareholder of the listed entity, and for that he should not own more than 2% of the total voting power of the listed entity. In the given case, what is happening? He plus his wife put together, what does it say? 11,94,000, right? Total voting power. So it is being 2%. Hence, objection raised by CA Pradeep on the appointment of the independent director is valid and Srinivas is not eligible to be appointed as an independent director of the company, right? Not eligible. In this case, CA Pradeep should specifically mention in his report about the disqualification of the appointment as an independent director of Mr. Srinivas. He should also mention the name of the disqualified director, the date of the disqualification, and the reasons for the disqualification in his audit report. Entire answer I can manage to write only if I know one point over there. 2% or more of the total voting power should not be held either by himself or through his relatives. Are you understanding that? Right? 2% or more of the voting power. That is why now every sentence we have to read it so carefully. Right? So what was the case study number? Question number 7. Right, question number 7. Again, what is the common sentence before all the points which we are reading over here? Neither by himself nor through his relatives is a chief executive or a director of any non-profit organization whose more than 25% receipts are coming from the LHSA or the promoters or director or people who hold more than 2% of the total voting power. So that means now what? Neither me nor my relative should be a chief executive or a director of a non-profit organization. So I am say a chief executive of a non-profit organization, but this non-profit organization ka more than 25% receipts are coming from the LHSA. It says you cannot become an independent director. Why? Because you or your relative are the chief executive or a director of a, like Sudha Murthy, like she is working in Infosys Foundation. You understand? And then lot of more than 25% of the receipts might be coming from, say, Infosys. So can she be an independent director in Infosys? No. A chief executive or a director of a non-profit organization whose more than 25% receipts are coming from the LHSA promoter directors or that holds 2% or more of the total voting power. And last point, neither by, array, you don't remember the common sentence, neither by himself or through his relatives is a material supplier, service provider, customer, lessor or lessee of the listed entity. Right? So say I have one building which I can give on lease and that building I have given it on lease to Infosys. Can I be an independent director in Infosys? No. It says you should not be a material lessor, lessee, service provider or the customer or so. Right, so that we need to check whether that lease property which I have given on to Infosys on lease, whether it is material or not. Right, so point number 1, he should be person of patience, person of integrity. Then he should be not a promoter, not related to the promoters. Then should not have any pecuniary relationship. Then none of his relatives. 141 3D1, 141 3D2, 141 3D3. Are you understanding? For the relatives. And any other pecuniary relationship with the LHSA which is 2% or more of the gross turnover or the total income. Then neither by himself nor through his relatives holds the key managerial personnel or the employee. Then is neither an employee, partner, proprietor of the 5 firms. Then is not holding more than 2% of the voting power. Is not a chief executive or a director of any non-profit organization whose more than 25% are receipts coming from the LHSA or the promoter director. Or neither by himself nor through his relative is a material supplier, service provider, customer, lessor or lessee of the listed entity. Next one. What does it say? Who is not less than 21 years of age, right? So minimum age requirement is the 21 years. Okay. And now listen to me over here. Carefully listen to me one time only. We should not repeat. Okay. Yes, listed entity and this is another entity. Okay, right. Now this listed entity has a non-independent director. And this listed entity, so listed entity, who is the example of my listed entity? Say Infosys. And another entity, say ABC Limited, which is another entity, non-listed or whatever it is. Okay, right. So now in Infosys, this person is a non-independent director. And this person who is a non-independent director in Infosys is an independent director in some other entity. And in this other entity where he is an independent director, another director is a non-independent director. Now, so now this person is a non-independent director in which company? In which one of the non-independent director of the listed entity is an independent director, it says you cannot become an independent director of the listed entity. Once more, I knew it. You understand? Okay. Right? He is, say, the managing director. So that means non-independent director, non-executive director. Are you understanding? Say Mr. R is the non-executive director of Infosys. And Mr. R is also an independent director in ABC. Mr. R is non-executive director. That means he is non-independent director in Infosys. Are you understanding? He's a non-independent director in Infosys, right? So that means, say, he's managing director, whole-time director, just for an example right now. And in another company, he is an independent director, but in Infosys, he's a non-independent director. Now, what does it say? In this other company, whosoever is the non-independent director, who is non-independent director in such a company in which one of the non-independent director of the listed entity is an independent director, in which one of the non-independent director of the listed entity is an independent director. A non-independent director of that another entity cannot become an independent director of the listed entity. Why? Because it will lead to accustomed to act. And it will lead to, now what you say, shadow directorship over there. You say, oh, my one person is sitting over there, I have the control over there, so I can manage it over here. So it says even that is not allowed. Okay, right. So who is not a non-independent director of another company on the board, of which any non-independent director of the listed entity is an independent director? Arey, read the second part of the sentence. Don't talk, re. Right? What is the second part of the sentence? Non-independent director of the listed entity is an independent director. Have I written that over here? Non-independent director of the listed entity is an independent director in another entity. Are you seeing the marking? Non-independent director of listed entity is an independent director in the other entity. Then what does it say? He cannot be a non-independent director, right? Who is not a non-independent director of another company on the board. So if he is a non-independent director in that other company, can he be an independent director in Infosys? No, he cannot be an independent director in Infosys. Do you understand that? Why? Because otherwise it will lead to accustomed to act. Okay, so what does that mean? Okay, I am a non-executive director in one listed entity, right? And in this listed entity, I am non-executive director, but in another entity, I am the independent director. Another entity, I am the independent director. And that company, other company, does it also have the non-independent directors? Yes. Now, can they become independent directors in those companies where I am a non-independent director? No. You understand? Can they become an independent director in those companies where I am a non-independent director? No, because I am a non-independent director of this company, but I am an independent director of the other company. So these people cannot become the ID of this company. Whatever I have written over here is 100% correct. Today going home, you can chew it again and again. And you can check and concern it again, check and correct it again and again. What do you say? Check and confirm it for yourself again and again. Right? Okay, that's the beautiful definition of the independent director. I really love the way our book looks after we've studied something. You understand? No, it looks so amazing, It looks so great. As if, some a big, what do you say, R&D has happened on the content of the book over there. Right. Anyways, abhi to we are only on the composition of the board of director. Now, such a long route we have to go to. So, no chur 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 chur, no talking. Okay, keep quiet. Remuneration. Explain to him after class. Anyways, he'll not understand right now. After class, take half-hour lecture. Right now, let me take the lecture. Okay, right. Okay, remuneration of, still talking? Some of you too much of guts, huh? Okay, remuneration of the directors and all the remuneration being paid to the directors. The disclosure requirement. What does it say? All monetary relationship or transaction, right? All the monetary, pecuniary means what? Monetary relationship or transaction of the non-executive directors with the listed entity shall be disclosed in the annual report, right? So did we see it in the annual report of Infosys corporate governance report? All the remuneration being paid to the executive as well as the non-executive directors. Full disclosure we saw over there, right? Then criteria of making the payment to the non-executive director, right, should also be given in the annual report. Alternatively, this can be given on the entity's website and a reference can be drawn thereto in the annual report, right? So all the pecuniary relationship should be given in the annual report. Then what is the criteria for making the payment? Either you give it in the annual report or you give it on your website and provide a web link thereto in the annual report of the listed entity. Are you understanding that? Right. And what disclosures regarding the remuneration of directors are to be given in the corporate governance section of the corporate governance of the annual report? All elements of the remuneration package, right? As individual directors summarized under major group: salary, benefit, bonus, stock option, pension. Did we see that? And that's why I told you, seeing that Infosys report properly, very important for us. And a base salary, benefit, bonus, stock option, pension, details of fixed component and the performance link incentives along with the performance criteria. So the commission which was paid, service contract, notice period and the severance fee. That is if they leave the company before the tenure, and stock option details if any. Right, so these are the disclosures to be done regarding the remuneration of the directors in the corporate governance report in the annual report of the company. Right, so in the annual report there is a corporate governance report. In that corporate governance report the remuneration to directors should be disclosed. Simple. Is it clear to all of you? Next one, the approval of the remuneration to the director. So who needs to approve the remuneration? What does it say? All fees, compensation if any paid to the non-executive directors including the independent directors has to be fixed by the board and will require the previous approval of the shareholders, right? So one, what does it say? All fees remuneration being paid to the NED. NED is what? Non-executive directors including the independent directors shall be fixed by the board and will require the prior approval of the shareholders in the general meeting. Prior approval of the shareholders in the general meeting. And the shareholders resolution shall specify the limit for the maximum number of the stock options that can be granted to the non-executive directors, right? So maximum how much ESOP can be given to them shall be, yes, so resolution shall specify the limit. Then prior approval of shareholders is not required for the payment of the sitting fees to the non-executive directors, right? So for sitting fees, what does it say? No prior approval will be required, right? So for sitting fees, what does it say? No prior approval will be required. Then independent director shall not be entitled to any stock option, right? So independent directors, zero. Can they get any ESOP from the company? No, they cannot get any ESOP from the company. And the next 2 points over there are MCQs, right? Special resolution when it is required. Both of them are favorite MCQs over there, right? Say the total remuneration being paid to the non-executive directors of Infosys is 10 crore. Example, the total remuneration being paid to the NED. Who is NED? The non-executive directors is 10 crore. And out of that, to one single NED, they are paying 6 crore. So more than 50% is being paid to a single non-executive director out of the total remuneration being paid to all the non-executive director. That means it's look lopsided payment to one non-executive director. It's a special resolution required in the general meeting. Right? Special resolution shall be obtained every year in which the annual remuneration payable to a single non-executive director exceeds 50% of the total remuneration being paid to all the non-executive directors, giving details of the remuneration thereof. Right? So total, how much are you paying to the non-executive directors? Say 10 crore. Out of that, to one single non-executive director, you are paying 6 crore. That is more than 50% is going to one single non-executive director. It says SR and GM. Otherwise, ordinary resolution in general meeting. But in this case, it requires the SR and GM. Now coming to the payment to the executive directors. If the payment to the executive directors is exceeding 2.5% of the net profits or 5 crore, whichever is higher. Again, what does it say? SR and GM. And if the company is having more than one executive director, then what does it say? If it exceeds 5% of the net profit, again, what is required is the SR and GM. So if it exceeds 2.5% of the net profits or 5 crore, whichever is higher. And if it is having more than one executive director, if it exceeds 5% of the net profits. Right, if it exceeds 5% of the net profits, then again a special resolution is required. So remuneration to non-executive directors, remuneration to the executive directors. Are you getting that? Right, so that completes our first part of our discussion over there, which is regarding the the composition of the board of directors. Is it clear to everyone? What did we discuss under the composition of the board? Right, composition of the board, then the obligation, maximum number of directorship 773, then obligations with respect to the employees, including the senior management, key managerial personnel, the directors or the promoters. Then after that, we studied the definition of the independent director. Then after the definition, we looked into the remuneration of the director, what are the disclosure requirement, and also the approval of the remuneration. Now coming to the first committee under SEBI LODR, that is, we are now going to talk about the audit committee. Right, so now we are going to talk about the audit committee under SEBI LODR. And what are we going to discuss regarding this audit committee over there? One, the constitution of the audit committee. Right, next we are going to discuss the meetings and the quorum of this audit committee. Right, please note, talking audit committee is ATF top 10. Right, audit committee is the ATF top 10. Right, then after the meetings and quorum, we have the after the meetings and quorums, we have the powers of the audit committee. Then we have the role of the audit committee, and then you have the review of the information, which is also called as the mandatory areas of review by the audit committee. The mandatory areas of review by the audit committee. Right, so now regarding the audit committee, we are going to be discussing the 5 questions. What are the 5 questions? Constitution of the audit committee, meetings and quorums of the audit committee, powers of the audit committee, role of the audit committee, and the mandatory areas of review or the review of information by the audit committee. Right, we are talking about the audit committee under SEBI LODR. Are you all with me? Right, so constitution of the audit committee. Is everybody with me? Right, constitution of the audit committee. So I have written board of directors. Now next to board of directors, what do I write down over there? Audit committee. है ना? AC. What is AC? It is the audit committee. What does it say? Minimum 3 members. Minimum how many audit committee members? 3 members. Because 2 members, then how you call it committee? Na? So minimum to 3 to hona hi chahiye. And at least 3 to should be there for it to become a committee. Minimum 3 members. At least 2/3 shall be the independent directors. If the company is having the outstanding superior right, equity shares, then what does it say? All should be the independent directors. Then it says the chairperson of the committee shall be an independent director. Chairperson of the committee shall be an independent director. He will be present at the AGM to answer the shareholder query, and the company secretary will act as a secretary to this committee. The company secretary will act as a secretary to this committee. Right, so what is the constitution of the audit committee? Minimum 3 members, at least the 3 members, 3 directors, then at least 2/3 shall be the independent directors. If it is having the outstanding superior right equity shares, then all shall be the independent directors. Chairperson of the committee has to be an independent director. He shall also be present at the AGM to answer the shareholder query, and company secretary will act as a secretary to this committee, right? So how many members? Audit committee members, minimum 3 directors. Are you getting that, right? The minimum 3 directors. And how many audit committee meetings in a year? Not less than 4 times, and a time gap of not more than 120 days between any 2 audit committee meetings. Are you getting that, everyone? Okay, right. So minimum 3 directors, 2/3 shall be the independent directors. Outstanding superior right, then only they should be having the independent directors. Then what does it say? At least 1 director should be having the financial expertise, right? At least 1 director should be having the financial expertise. And what does it say? All should be having the, yes, one director should be having the financial expertise, and all others should be financially literate. Right, so one should be having financial expertise, and all directors should be financially literate. So financially literate when you are able to read and understand the financial statements. So at least 1 director should be having financial expertise, and all directors should be financially literate. Then what does it say? Chairperson of the committee has to be an independent director. He will be present at the AGM to answer the shareholder query. Then company secretary will act as a secretary to this committee. And then audit committee at its discretion, that is on its own, it will decide on its own judgment, shall invite. Who all they can invite audit committee? 1, the finance director or the head of the finance function, number 1. Second, whom they can invite? The head of the internal audit. Third, a representative of the statutory auditor. Or fourth one, such other executives to be present at the meetings of the committee, provided that occasionally the audit committee may meet without the presence of any of the executives of the listed entity. Right, so what is the important point over there? Can they invite the finance director? Yes. Can the head of the finance function be invited over there? Yes. Can the head of internal audit be invited to attend the audit committee meeting? Yes. Can the representative of the statutory auditor be invited? Yes. And that is when we are going to do the 260, communication with those charged with governance, when we are invited to attend the audit committee meeting. Because audit committee member for us is those charged with the governance, the highest level of the management in the organization, right? So they can invite people from the finance, they can invite people who are the internal auditor, the chief internal auditor, right? The head of the internal audit. They can invite people from the stat audit, and they can also invite any other executives as they may be considered necessary. Okay, then meetings, how many meetings? At least 4 times in a year, with a time gap of not more than 120 days between any 2 meetings. And what is the quorum? 2 members or 1/3 of the members, whichever is greater, with at least 2 independent directors present. So now what is the quorum? 2 members or 1/3 of the members, whichever is greater, with at least 2 independent directors present. So here it was 1/3 or 3, whichever is higher, with at least 1 independent director in the board meeting. Now here what it is? 1/3 or 2, whichever is greater, with at least 2 independent directors present. That means if 2 directors are present, that means all 2 have to be independent only, because it says minimum 2 independent directors to be present. Is it clear to everyone? Qualified and independent audit committee, that is constitution of audit committee. Then we discussed about the meetings and quorums of the audit committee. Now looking into the powers of the audit committee. What is the power? I know what is the power of this committee? It says this committee is going to one employee, committee member is going to one employee of the company and telling employee, please give me the information regarding the raw material which we've purchased. Audit committee member, audit committee member, he is going to one employee and he's telling inventory manager, give me the details of all the raw material which we purchased during the year. Can the audit committee member do so? Yes, he can seek information from any employee. So they make a case study in the exam. Now, we saw na 2%, 1 point they picked up and they made such a big case study over there. Right, so he's asking information from any employee, audit committee member. Does he have the power to do so? Yes. Can he investigate any activity within its term of reference? Yes. Can it seek legal or professional advice? Yes. Can it secure the attendance of outsiders with relevant expertise? Yes. Right, and these powers are only illustrative and not exhaustive. They can do any other work power, they have any other power as could be required. Okay, right, so investigate any activity within its term of reference, then seek information from any employee, then also obtain or seek the legal or professional advice, also secure the attendance of the outsiders with the relevant expertise. These are the powers of the audit committee. What are the points which we want to study regarding the audit committee, everyone? Right, we want to study regarding the the constitution of the audit committee, then the meetings and the quorum of the audit committee, the powers of the audit committee. Now what we are yet to discuss is the role of the audit committee and the review of information by the audit committee. Are you understanding that? Right, so now this committee is created. Now what will this committee do? What is the role of this audit committee in the organization, right? What is the role of the audit committee in the organization? So the first role of the audit committee in the organization is obviously going to be all matters relating to audit. And mainly which audits are we talking about over here? We are talking about the stat audit and we are talking about the internal audit. So stat audit means I'm also talking about the financial statements, and internal audit means I'm talking about the internal control system. And nowadays, there is lot of noise, not only regarding internal control, there is a lot of noise regarding the risk management system. Rather, you saw, no, कि some companies, they also have to have a risk management committee. Right, so audit committee, will they also review the risk management system or the risk management policy of the company? Yes. Will they review the quarterly and annual financial statements? Yes. Will they look into the appointment of the statutory auditor? Will they look into audit committee? Yeah, yesterday we had discussed, no, that the audit committee will consider the qualifications and experience. Then qualification and experience, is it commensurate with the size and requirement? Then any orders or proceedings. Right, then they will make the recommendation to the board. Then the board may agree or disagree. Are you understanding that? Then what did we study? Section 144. What was 144? Auditor not to render certain services. Other services to be rendered should be approved by the audit committee or the board of directors. Are you understanding that? Right, so do they have some role regarding the auditors, right, regarding the statutory auditors of the company? Yes. Then also we say two-way effective communication with the TCWG. So should the TCWG audit committee members also communicate with the statutory auditors of the company? Yes. Right, should they evaluate the independence of the auditor? Yes, they should also check for the independence of the auditor. Will they go through the reports of the internal auditor? Will they go through the internal audit system of the company? Yes. And apart from that, what does it say? RSVP. What is RSVP? They will also go through the related party transactions and also go through the risk management system. They will also do the scrutiny of the intercorporate loans and investments. They will also check the valuation of the undertakings and assets. They will also check the utilization of the issue proceeds. And which proceeds am I talking about over here? Issue proceeds. Yesterday, no, day before yesterday, which clause of CARO? Issue proceeds? Clause 10 of CARO, IPO, FPO, preferential allotment, private placement, has it been applied for the purpose for which it has been raised? And so utilization of the issue proceeds. Then apart from that, what are they going to check for? Any substantial default in the repayment of the deposits or debentures, any substantial defaults. Then they are also going to review the vigil mechanism or the whistleblower mechanism of the listed entity. They are also going to look into the appointment of the CFO of the listed entity. They are also going to look into the rationale behind the merger or demerger or amalgamation or so. What are the cost benefits for the same and the benefits of the same, right? So these are a few points to be included, because in total, if I look over here, oh my God, around 20 to 21 points are there in the role of the audit committee. And in that, they ask a retail question in the exam. What retail question they ask in the exam. Okay, role of audit committee vis-a-vis the review of financial statements. Right, you have this question over here, which is regarding the role of the audit committee vis-a-vis the review of the financial statements. Mr. Yu, a respectable chartered accountant of international repute, was requested by one of the major corporate in India to join its board and also as a chairperson of the audit committee. He expressed his apprehensions that he is not having the requisite experience. Mr. Yu seeks your view on the responsibility of the audit committee relating to the review of the financial statements. So again, that's a retail question in the point number 4 in the role of the audit committee. Right? What are the other questions over there? The qualified and independent audit committee, constitution. Then another wholesale question, what is the role of the audit committee? Then they've asked role of audit committee under section 177. Another question regarding the constitution of audit committee under section 177, because after SEBI LODR, we are also going to look into the audit committee under section 177. Okay, right. So now, who approves the financial statements? The board of directors. Who approves the financial statements? The board of directors. Who prepares the financial statements? The management. So management, do they submit them to the board for approval? It says management, before you submit the financial statements to the board for approval, it says the audit committee will review with the management the financial statements before sending them to the board for their approval. Right? That is the point number 4. What does it say? Reviewing with the management the financial statements and the audit report thereon before submission to the board for approval with particular reference to. Right? So audit committee and management, they will first review the financial statements and the audit report, and then they will submit it to the board for their approval. Are you understanding this retail question over there? Right? What was the question number? Question number 8. Yes, question number 11. Okay, right. So review with the management the annual financial statements and the audit report thereon before submission to the board with particular reference to. One, matters to be included in the DRS. That what is DRS? Right, the director's responsibility statement. Yesterday we said no, 3A, 1G, 2S. Right, so matters to be included in the DRS. Then changes in the accounting policies, major accounting entries. Right, so accounting policies, any change, major accounting entries involving the estimates. Then what does it say? Point number D and G. Can anybody give me alternative words for point number D and G? D and G. Can anybody give me the significant adjustments made in the financial statements arising out of audit finding and modified opinion in the draft audit report? Means we are talking about the corrected misstatements and the uncorrected misstatement. Am I right? Right? The corrected and the uncorrected. Significant adjustments made in the financial statements arising out of the audit finding. Means auditor had a finding and management corrected. That means it's a corrected misstatement. And then modified opinion. Whatever they don't correct, that is the uncorrected misstatement. So modified opinion in the draft audit report. Apart from that, what does it say? Compliance with the listing and the other legal requirement and disclosure of the RPT. What is RPT? The related party transactions. Right? So matters to be included in the rest, the matters to be looked into by the audit committee with the management before submission to the board. One, matters to be included in the DRS. Then any changes in the accounting policies. Then any major accounting entries. Then what does it say? The significant adjustments made in the financial statements arising out of the audit finding. Then compliance with the listing and the other legal regulatory requirement. Then the disclosure of the RPT and the modified opinion in the draft audit report. Right? And the modified opinion in the draft audit report. Is it clear to everyone? Right. And otherwise, what did I tell you? What is the role of the audit committee? Mainly 4 points: financial statements, stat audit, internal control system, and the internal audit. Is it getting clear to you? Audit committee. So which two audits mainly? Stat audit and internal audit. Stat audit is relating to financial statements and internal audit is relating to the internal control system. Right. So now what are the 4 points I'm telling you over there? Right. Financial statements, statutory audit, internal control system, and then you also have the internal audit. Are you able to follow this? Okay, right. So now for financial statements, what does it say for the financial statements? What is the role of the audit committee? To oversee the financial reporting process and the disclosure of financial information to ensure that it is correct, sufficient and credible. So one, what is the role of the audit committee? To oversee the financial reporting process, right? Then second set of points is regarding the statutory audit. What does it say? Recommendation for the appointment, remuneration and the terms of appointment of the auditor. Then approval of payment to the statutory auditor for any other service rendered by the statutory auditor. That is that 144 other services to be approved by the audit committee or the board of directors. Are you getting this point? Okay, then reviewing and monitoring the auditor's independence and performance and the effectiveness of the audit process. Then also, what does it say? Discussion with the statutory auditors before the audit commences about the nature and scope of the audit, as well as the post-audit discussion to ascertain any area of the concern. Right, so these are the points regarding the statutory audit, right? Then regarding the financial statements, what does it say? Review with the management the quarterly financial statements before submission to the board, right? Review with the management the quarterly financial statements before submission to the board, right? Then you have a point regarding the internal control system. What does it say for the internal control system? Right, review with the management the performance of the auditors and the adequacy of the internal control system, right? So reviewing the adequacy of the internal control system, right? Then after that you have the point regarding the internal audit. What is the point regarding internal audit? It talks about the adequacy of the internal audit function. Then the internal auditors and discussions with the internal auditors of their significant finding. Then the internal investigations by the internal auditor, right? Then the internal investigations by the internal auditor. And then what did I tell you? RSVP, right? What is RSVP? One is regarding the transactions with the related party and second is regarding the risk management system. What did we say? Audit committee nowadays not only looking into the internal control system, but they also look into the risk management system in an organization, right? Then S is what? S is for the scrutiny of the intercorporate loans and investments. V is for the valuation of the undertakings and assets, and then P is regarding the utilization of the issue proceeds, right? So utilization of the issue proceeds, right? So the proceeds. Reviewing with the management the statement of uses and application of funds raised through an issue and the audit report submitted by the monitoring agency, right? For the utilization of the proceeds or for public or a right issue. Right, so what are we trying to look into over here? Okay, what is the role of the audit committee? So 4 points was first 4 points. What did you understand? Financial statements, stat audit, internal control system, internal audit. One set over. Okay. Then they will review with the management the financial statements before submission to the board. Second set over. Yes. What is the third set? RSVP. Right, related party transaction, the risk management system, scrutiny of intercorporate loans and investments, valuation of undertaking and asset, and monitoring the end use of the issue proceeds. Are you able to follow that? Yes. Now we look into the other points. What are the other points which we have over there? Right. Yes. What are the other points? To look into the substantial default. Right. To look into the substantial default in the payment to the depositors, debenture holders, shareholders, and the creditors. To review the functioning of the whistleblower mechanism. To look into the approval of appointment of the CFO. What they do, they make a case study or an MCQ in the exam. That audit committee is looking into the whistleblower mechanism. Now you say it is not in the role of the audit committee. No, it is in the role of the audit committee to review the whistleblower mechanism. It says the audit committee is approving the appointment of the CFO. It says, who are you to approve the appointment of the CFO? Again, what it says, it comes in the role of the audit committee, the approval of appointment of the CFO after assessing the qualification, experience and the background. Then the utilization of the loans and advances from investments by the holding company in the subsidiary exceeding 100 crore or 10% of the asset size. Right. Then considering the rationale, the cost benefit and the impact of the merger, demerger, amalgamation, etc. And okay, they are saying we'll merge two companies, we'll merge these two entities like Air India and Vistara. They are saying we'll merge. So audit committee will look into the rationale, the cost benefit and the the impact of such scheme. And it says, in case if we forgotten anything, any other function as is mentioned in the terms of reference of the audit committee, right? So what did I put behind me? Look at me once again. First 4 points, what I said: financial statement, statutory audit, internal control system, and internal audit. Then they will review with the management the financial statements before submission to the board. DRS, accounting policy, accounting entry, and significant audit adjustments, modified opinion, listing and other requirement, and RPT. Okay. Then RSVP. What is RSVP? Related party transactions, risk management system, scrutiny of intercorporate loans and investment, valuation of undertaking and assets, and the monitoring the end use of the issue proceeds. Are you getting that? And then you have these other points: substantial default, whistleblower mechanism, CFO, approval of appointment of the CFO of the company, utilization of loan, consider the rationale, and any other function. Are you understanding this, everyone? Okay. Then next question is $1 million question. It is 5-star. It is ATF top 3. Right? Review of information by the audit committee. God knows why they like it so much, but they asked it so many times. And a mandatory areas of review by the audit committee. The review of information by the audit committee. What are the mandatory areas of review by the audit committee? Right. What is compulsory? Okay, audit committee members have come and now they are doing the audit committee meeting. What are the mandatory areas of review for the audit committee? Mandatory, review of information. What are we talking about? Mandatory. So mandatory is the MD and A, management's discussion and analysis. Then management discussion and analysis, then LOW, that is the letter of weakness issued by the statutory auditor. Which SA? SA 265, communicating deficiencies in internal control, right? Then internal control weakness issued by the statutory auditor. Then the internal auditor report on the internal control weakness. Then internal auditor, obviously the approval, removal and terms of remuneration of the chief internal auditor, and the statement of the deviations. So it is such a big coincidence. Okay, for these mandatory areas of review, we have all three alphabets over there: management discussion and analysis, letter of weakness, then the internal auditor's report. This is not statutory or independent audit report. This is internal auditor's report. Then the appointment, removal and terms of remuneration of the chief internal auditor, and the statement of deviation of the funds. Right? So mandate areas of review or the review of information. So what is mandatory? MD and A. Are you getting it from this only? MDA. And mandatory areas of review, MD and A. Now, what are they going to discuss about? They are going to talk about the weaknesses which have been identified by the statutory auditor, then the weaknesses which have been identified by the internal auditor. Then they say, this internal auditor has not found any weakness only. So they will look into the appointment, removal and terms of remuneration of the chief internal auditor. And appointment, removal, they say, remove this fellow, not doing good job, hopeless, appoint another fellow. And they will say the issue proceeds. So the statement of deviations and of the issue proceeds. Okay. Management discussion and analysis of the financial condition and result. Later on, we have a retail question on MD&A. Then management letter of the internal control weakness issued by the statutory auditor. Then internal audit report relating to the internal control weakness. Then appointment, removal and terms of remuneration of the chief internal auditor shall be subject to the review by the audit committee. And the SOD. What is SOD? Statement of deviation. Quarterly statement of deviations including report of the monitoring agency and annual statement of funds utilized for those other than those stated in the offer document. Where we studied this? Fund utilized for purposes other than those stated in the offer document. I taught you proposed utilization, actual utilization, clause 10 of CARO. Right, issue proceeds, right? You were correct. Clause 10 of the CARO, which is regarding the issue proceeds. Is it clear to everyone? Mandatory areas of review by the audit committee. Okay, right? Let us come to this question over here. Mr. BK, partner in BK and Associates, as part of their audit presentation to the audit committee of XYZ Limited, a listed company, highlighted the following. So what are they telling audit committee about? Difficulties faced during the audit, disagreements with the management letter points, draft management representation letter to be provided by the company in connection with the audit. So these are more of the matters of SA 260, communication with TCWG. Some of the audit committee members were not happy with the above presentation and asked Mr. BK to take it back and submit directly to the board. They believe that audit committee is not the forum for discussing such problem, and this has to be sorted out between the auditors and the management. Please comment on the above. So now your answer starts with as per SA 260. The statutory auditor of the company has an obligation to bring certain matters to the attention of the TCWG. Then audit committee is also under an obligation. How beautifully they write. Statutory auditor is under an obligation. Audit committee is also under an obligation to mandatorily review certain areas before giving their recommendations input to the board. And given below are the areas which are to be mandatorily reviewed. So then you write down the mandatory areas of review by the audit committee over there. Are you understanding? Then the auditor should further ascertain whether the MD&A, a management discussion and analysis report, includes discussion on the matter stipulated. Whether certain deficiencies or adverse findings are noted by the audit committee, the auditor will be required to see that they have been suitably dealt with by the management in the report of the corporate governance. Are you understanding that? What does it say for management discussion and analysis? How it affects the financial condition and the results of the operation. So whether it has been suitably dealt with. Okay. In the given case, what is happening? And contention of those audit committee members regarding problems to be sorted out between auditor and the management is not in order, as audit committee is required to mandatorily review the same in accordance with the SEBI LODR regulations. Is it clear to everyone? Next question. Question number 15. Target Limited, having paid up capital of 15 crore, has constituted an audit committee having 7 members. The chairperson of the committee is an independent director. As an auditor of the company, a CA firm needs your assistance to ascertain that audit committee has reviewed the information as per schedule 2 or not. Guide them about the information to be reviewed by the audit committee, or state the mandatory review areas of the audit committee. So again, a direct question asked 3 times in your exams regarding the mandatory areas of review. So this one question plus this 3 times, so 4 times, right? And plus over here you have one more question asked 2 times in the exam. D Limited, a company incorporated in India, has 6 members in its audit committee. Due to recessionary conditions in India, the revenue of the company is going down and there is slowdown in the other activities of the company. Therefore, it is expected that there would not be significant work for the members of the audit committee. Considering the overall recession in the company and in the economy, the members of the committee decided unanimously to meet only once at the year end. Ouch. Why? They have to meet at least 4 times in a year. Then they reviewed the monthly information system of the company and found no error. Out. How can they review only the monthly information system? There are the mandatory areas of review by the audit committee. How they reviewed only MIS? Nahi, there are the mandatory areas of review by the audit committee. As an auditor of D Limited, would you consider the decision taken by the committee to hold the meeting once in a year is in compliance with LODR? Also state the quorum requirement for such meetings. Okay, right? So what does it say? 4 times in a year with a time gap of not more than 120 days, 2 members or 1/3 of the member, whichever is greater, with minimum 2 independent directors. Then mandatory areas of review by the audit committee, and here there is a mandatory requirement also, and to review the monthly information system only is not sufficient. Hence the audit committee, here the audit committee members reviewed only the monthly information system of the company, and the same is not sufficient as per the LODR regulations. Okay, right? So 4 and 5, 6, right? So around 6 times question has come in the exam regarding this one point. What one point? Mandatory areas of review by the audit committee. What are the mandatory areas of review? Mandatory. So MD&A, है ना? and a mandatory, MD and A. Then after that you have the letter of weakness issued by the statutory auditor. Then the internal control weaknesses which have been found by the internal auditor. Then the appointment, removal and terms of remuneration of the chief internal auditor. And then also the statement of the deviations. Is it clear to everyone? Right. So right now what we have discussed is the audit committee under SEBI LODR. Now we quickly look into the audit committee under section 177. Right. So as per SEBI LODR, who is required to constitute audit committee? As per SEBI LODR, who is required to constitute audit committee? Listed company. As per SEBI LODR, who is required to constitute audit committee? Listed entity. As per section 177, who is required to constitute audit committee? Listed company, and every public company having paid up share capital of more than or equal to 10 crore, or having the turnover of more than or equal to 100 crore, or having in the aggregate LBDD, loans, borrowing, debenture, deposits of more than or equal to 50 crore. You remember we studied this applicability yesterday, right? They are required to constitute the audit committee. Right, so that's the difference in the applicability for the audit committee under SEBI LODR and the audit committee under 177. Are you able to understand that? Okay, right. Then the unlisted public company, which is a joint venture, wholly owned subsidiary and a dormant company, shall not be covered, right? So that is again an MCQ candidate for section 177. Okay, unlisted public companies, when are they not required, even though if 10, 150 is fulfilled? If it's a joint venture, wholly owned subsidiary and a dormant company, it shall not be covered. Right, then what is the constitution of the audit committee under section 177? It says minimum of the 3 directors. Same over there in SEBI LODR also, minimum 3 directors. Yes, in SEBI LODR also, how many directors? 3 directors. There what does it say? At least 2/3 shall be the 2/3 shall be the independent directors. Here what does it say? Majority shall be the independent director. So this is a different point. There it says 2/3 shall be independent. Here it says majority shall be independent. There what does it say? If the company is having outstanding superior right equity shares, all shall be independent directors. Here no such mention is there. There what does it say? One member shall be financial expert and all shall be financially literate. Here it says majority should be in a position, including the chairperson, to read and understand the financial statement. Right, there it says all should be financially literate, one should be having financial expertise. Here it says majority, including the chairperson, shall be having the ability to read and understand the financial statements. Okay, and then we also have the functions of the audit committee under section 177. What are the functions of the audit committee? Obviously, if we've studied so many points over there in SEBI LODR ka role, then this is nothing in front of that. What does it say? The recommendation for the appointment, remuneration and the terms of appointment of the auditors of the company. However, in case of government company, this is limited only to the recommendation for the remuneration. Why? Because there the auditor is appointed by the CNAG. Then reviewing the auditors' independence and the performance and the effectiveness of audit process. Then financial statements and the audit report. Then RSVP. Do you remember RSVP? Right, what was RSVP? Related party. Then scrutiny of intercorporate loans and investments, valuation of undertakings and assets, monitoring the end use of the funds raised through public offers and the related matters. And R also stands for the risk management system. And also what they look into is the internal financial control. So obviously once I know the role of audit committee under SEBI LODR, yes, this is a very sub part of the role of audit committee under 177. So if a company complies with the requirement of audit committee under SEBI LODR, does it automatically comply with section 177? If a company complies with the requirements of audit committee under SEBI LODR, does it automatically comply with the requirement of section 177? Yes, because that is much more stringent and much more wider. But does it work vice versa? If you comply with the requirement of 177, you've complied with the requirement of audit committee under SEBI LODR? No, that does not happen. Okay, right? So that completes our discussion for the first committee over there, which is regarding the audit committee. Is it clear to everyone? Right? Audit committee. Now coming to the next heading over there, which is regarding the information to the shareholders. Okay. Right. So now coming to the next point, board of directors, what responsibility do you have towards the shareholders? Board of directors, what responsibility? Because what are we talking about is the corporate governance. You know, what are we talking about is the SEBI LODR, right? So does the board of directors have any responsibility towards the shareholders of the company? Do the board of directors have any responsibility towards the shareholders of the company? Yes. So what is first responsibility they have towards the shareholders? To send the annual report to the shareholders. So what does it say? If the email address of that shareholder is registered, then the soft copy of the full annual report. If the email address is not registered, then the hard copy of the salient features, unless and until a full copy, what do you say, the full copy of the the full of the hard copy has been called for, right? So what does it say? Three situations over there. Soft copy if the email address is registered. If the email address is not registered, email address is not registered, and he has not requested for a full report, then what does it say? Only the extracts, only the hard copy you send of the extracts. Okay, yes, an email is not registered but has called for the full copy, then you need to send the hard copy of the full annual report. Are you understanding that? So hard copy of the extracts if they've not called for a full one, and if they've specifically asked for a full copy, then the hard copy of the full annual report, and this has to be sent at least 21 days before the date of the meeting, right? At least 21 days before the date of the meeting. Right, so first requirement in SEBI LODR in providing information to the shareholders is providing information relating to the annual report. So what does it say? The soft copy of the full annual report to those shareholders whose email address is registered with the listed entity or with any other depository. Then hard copy of the statement containing the salient features of all the document as specified for those who have not so registered their email address, and hard copies of the full annual report who request for the same. Right, so hard copies of the full annual report if they request for the same, and this has to be sent at least not less than 21 days before the AGM. So what one information to be given to the shareholders is what? The annual report. Then second information to be given to the shareholders is regarding those directors who are to be appointed or reappointed. Right, so second information to be given to the shareholders is regarding those directors who are to be appointed or who are to be reappointed as the directors of the company, because who will approve the appointment of a director? The shareholders. So should the shareholders be provided the information regarding the directors to be appointed or reappointed? Are you able to understand this point? Should the shareholders, what is the heading that we are discussing? Information to shareholders. So what is the first information? Annual report. Now what is the second information? Information regarding those directors who are to be appointed or reappointed. In case of appointment of a new director or the reappointment of a director, the shareholders must be provided with the following information. One, a brief resume of the director. Second, the nature of his expertise, right? So one is the brief resume of the director. Second, the nature of his expertise in specific functional area. Then third one, the disclosure of the relationship between the directors inter se. Okay, this is nobody but the son of so and so and so. And so disclosure. So one, already the father is a director in the company and now the son is being made a director in the company. So disclosure of relationship between the directors inter se. Then name of listed entities in which the person already holds the directorship and the committee memberships of the board, along with the listed entities from where he is resigned in the last 3 years. So what other information should be provided to the shareholders? Which other companies he is the director, which other companies he is holding the membership of the committees, and which other companies has he resigned as a director during the last 3 years. Which in regarding whom are you providing the information? Regarding whom are you providing the information? The directors who are to be appointed or reappointed. This information you're providing to whom? To the shareholders. What information are you providing? Brief resume. Then the nature of their expertise. Then the disclosure of the relationship between the directors inter se. Then other companies in which he is a director, where he is a committee member, and other companies from where he is resigned as a director in the last 3 years. Then shareholdings of the non-executive directors in the listed entity. So shareholding of the non-executive director in the listed entity, including the shareholding as a beneficial owner. And in case of the independent director, the skills and capabilities required for the role and the manner in which the proposed person meets such requirement. Right? So in case of independent director, the skills and capabilities which are required and how you think that this person is meeting those requirement. How do you think that the person is meeting such requirement? You have to justify the proposal to the shareholders. Okay, why you are suggesting that this fellow should be appointed as an independent director. Are you able to understand this, everybody? Right. So could this be a retail question in your exams? 100% yes. Right. So retail question. Information to be provided regarding the directors who are to be appointed or reappointed. To whom is this information to be provided to? It is to be provided to the shareholders. Then third thing for the shareholders, it says make a committee. Which committee to make now? SRC, Stakeholders Relationship Committee. Right. So are we preparing a comparative chart of the committees over here? Right. So now the third committee which I will add over here is the Stakeholders Relationship Committee. Are you understanding? So one, what did we do for the shareholders? We gave them the annual report. Second, we gave them the details regarding the directors who are to be appointed or reappointed. Now third, what are we doing for them? We are constituting a stakeholders relationship committee. Again, every committee at least 3 directors, at least 1 independent director. Array, what was it in audit committee? 2/3 independent. 3 directors so same, but what was it in audit committee? At least 2/3 shall be the independent directors. Here what does it say? At least 1 shall be the independent director. If the company is having outstanding SR, then 2/3 shall be the independent director. In audit committee, what did it say? If it is having outstanding SR, then all shall be the independent directors, right? So what does it say? Minimum 3 directors, at least 1 shall be the independent director. If the company is having the outstanding SR, then at least 2/3 shall be the independent directors. Are you able to follow? Minimum 3 directors, at least 1 shall be independent director. If the company is having the outstanding superior right equity shares, then what does it say? At least 2/3 shall be the independent directors. Chairperson of the committee has to be an independent director, has to be a non-executive director, right? So chairperson of the committee has to be a non-executive director. In audit committee, what did we say? Chairperson has to be an independent director. Here, what does it say? He has to be a non-executive director. Shall he be present at the AGM to answer the queries of the security holders? Yes, right? So shall be present at the AGM. So that point is same to same. And then what does it say? How many times will this committee meet in a year? At least once in a year. Audit committee, how many times did they meet? 4 times, right? Stakeholders relationship committee, how many times do they need to meet? At least once in a year. Right? Are you able to understand the comparison also over there? Right? 3 directors, at least 1 should be the independent. Outstanding SR, then at least 2/3 shall be the independent directors, and chairperson shall be non-executive, and he shall be present at the AGM to answer the shareholder query. Are you able to follow this, everyone? Okay, right. Did we look into the role of the audit committee? Role of the audit committee, gigantic role of the audit committee. Now looking into the role of the SRC, right? So third point is regarding the SRC. So now we look into the constitution of the SRC we have seen. Now we will look into the role of the SRC. What is the role of the SRC? For what is the name of this committee? Stakeholders relationship committee. Who is the main stakeholder over there? Shareholder. So now obviously the main role of this committee is going to be resolve the grievances of the security holder. And what are the shareholders making noise about? They say, I did not receive the dividend, I did not receive the annual report, I did not receive the notice of the general meeting. So all these grievances of the security holders will be looked into by this SRC, and resolving the grievances. Then they are saying, I'm not able to exercise my voting right. So taking measures for effective exercise of the voting rights. Okay, right. Then what does it say? Adherence to the service standards adopted by the listed entity in respect of services being provided by the registrar and share transfer agent. Right, so again adherence to the service standards, so that there is no delay in the transfer of shares, transpose in a transmission of shares or so. So one, resolving the grievances. Then that they should be able to exercise their voting rights. Third, they adhere to the service standards. And fourth, what does it say? Why they are not getting the dividend, why they are not getting the annual report. Are you understanding why transfer of shares is taking so much time? So what they should do? Review of the various measures and initiatives taken by the listed entity for reducing the quantum of the unclaimed dividend, ensuring timely receipt of the dividend warrant, annual report, statutory notices by the shareholders of the company, right? So trying to bring down the complaints as much as possible. Life becomes very difficult in CA final paper when they ask the role of the SRC. Role of audit committee, you managed to write 22 points, 4 points, not a big deal for you. And a 4-mark question, not a big deal for you to write. But boss, when they ask role of SRC, constitution of SRC, only this much is there. Now out of this much, those all has to be written. If so much is there, I can write this much, but only this much is there, then there is no scope for deviation over there. No, right? So what does it say? Resolving the grievances. It says, please don't complain. How much you are complaining? Okay. Then say, I'm not able to exercise voting right. Well, exercise voting right. Then it says service standards, share transfer agent. It says okay. Then you further again they'll come complaining, not able, not getting dividend, not getting annual report, not getting postal ballot, not be able to exercise voting right. So what, before they come again and again to your door, first take the various measures and initiatives in order to reduce the quantum of the unclaimed dividend and the complaints. Are you understanding that? Right. And then this task regarding the transmission of the shares or the transposition of the share, can it be delegated to a compliance officer or to the registrar? The board of directors, can they delegate the power of transfer of securities to a compliance officer or to a registrar? Yes, if the board or the delegated authority, if they have delegated this task to the registrar, it says they should look into the formalities, they should attend the formalities at least once in a fortnight. Again asked as an MCQ in your exams. Can the board delegate the task of looking into the transfer of share formality? Yes, but if they've delegated that task, how frequently they should look into the matter? At least once in a fortnight. And it may be noted that the delegated authority shall report on the transfer of securities to the board in each meeting. Okay, right. So that is over there regarding the information to the shareholders. But in the information to the shareholders, did we meet one committee over there? Right, we made the stakeholders relationship committee. So what are the takeaways? One, they need to give them the annual report. Then the details of the directors who are to be appointed or reappointed. Then after that, constitution of the SRC. Then the role of the SRC. And at least once in a fortnight, attend the formalities if it has been transferred to the registrar and the share transfer agent. Okay, right. So that completes our discussion of the SRC. What is SRC? Stakeholders Relationship Committee. Now coming to the next one, which is the Risk Management Committee, and this is highly trending, making lot of noise. And role of the Risk Management Committee to R raised to 50. Right, so now talking about the Risk Management Committee. Okay, right? Risk management committee, right? Nowadays, I told you, the trumpet is not only about internal control. Earlier, when Tally newly came and ERP and SAP started coming, the world started talking about internal control. Companies Act 2013 came, world started talking about internal financial control. Today also they talk about internal financial control, but today the focus is more on the risk management system in an organization. And it says to manage the risk in your organization, you need to create a risk management committee. So which companies, array, what I am telling will come in exam, what? Okay, right, risk management committee. So first, which companies are required to, I'm telling the seat ahead of you, okay, right, which companies are required to constitute the risk management committee? Right, which companies are required to constitute the risk management committee? Top 1000 listed entities. Okay, right, so top 1000 listed entities are required to constitute the risk management committee. Okay, now so far which committees did I discuss with you? Audit committee and the stakeholders relationship committee. Now I'm going to discuss the third one with you. Now see the first difference between other committees and risk management committee. In all the other committees, now what the other committees means, what? Audit committee, SRC and NRC. All members of these committees have to be the board members. All members have to be the board members. All members should be the board members. But only in case of the risk management committee, what does it say? Majority should be board members. And a majority should be the board members. Other senior management can also be the members of this committee. So do you understand? Any other committee, all members have to be board members. But for risk management committee, what does it say? Majority should be board members. Other senior management could also be the members of this committee. And that is why, what does it say? At least one director, one board member should be present. In case of SRC, what did they say? At least one independent director. Now what does they say? At least one director. And at least one director. So now we are talking about the risk management committee. Are you all with me? Right, now we are talking about the risk management committee, right? So risk management committee, now what will I say? Minimum 3 members. And now I cannot say minimum 3 directors. Now what will I say? Minimum 3 members. Majority should be the board members with at least one director, right? With at least one director. What does it say? One independent director, right? With at least one independent director. Okay, so the provisions of this will apply to whom? First we studied that. Earlier it was top 500. Now they've made it to top 1000 listed entities. Then what does it say? Minimum 3 members with majority being members of the board, including at least one independent director. So one independent director did we have over here also? Right, in case of the SRC also. So here also, what does it say? With at least one independent director. With at least one independent director. Are you with me? Okay, then what does it say? If it is having the outstanding superior right equity shares, then 2/3 shall comprise of the independent director. So next point, outstanding superior right equity share, then at least 2/3 shall be the independent directors. Are you able to follow this? Right, then at least 2/3 shall be the independent directors. Then chairperson of the committee has to be a member of the board. Because otherwise, what did we say? Chairperson should be independent director. Chairperson should be non-executive director. Did you notice it? Here we said chairperson should be independent director. Here we said chairperson should be non-executive director. Now what does it say? Chairperson should be a board member. And should be a member of the board. Are you understanding the difference? Yes, why? Because here other senior management could also be the members of this committee. So chairperson shall be a member of the board, and senior executives of the company may also be the members of this committee. Right, then what is the quorum for this committee? 2 members or 1/3 of the members of the committee, whichever is higher, with at least one member of the board in attendance. Generally, what we say, at least one independent director present or 2 independent directors. Here, what does it say? With at least one board member being present. Okay, right. So what is the quorum over here? 1/3 or 2? right? For the risk management committee, what does it say for the risk management committee? 1/3 or 2 independent directors, whichever is greater, with at least one board member being present. Right, with at least one board member being present. Are you understanding? How many times do they need to meet in a year? They need to meet at least twice in a year. That is 2 times in a year, with a time gap of not more than 180 days between any two meetings, at least twice in a year, and not more than 180 days between any two meetings. Are you understanding that? Risk management committee. Who needs to constitute? Top 1,000 listed entities. What is the constitution? Minimum 3 members. Majority should be board members, at least one independent director. If company is having superior right equity share, then 2/3 shall be independent directors. Chairperson of the committee should be a board member. And yes, what does it say? And other senior executives could also be the members. Quorum, 2 members or 1/3, whichever is greater, with at least one board member in attendance. Right? Then after that, meetings, what does it say over here? At least 2 times in a year, with a time gap of not more than 180 days. And now looking into the role of the risk management committee. Right? Now looking into the role of the risk management committee. Right? So what is the first role of the risk management committee? To have a risk management policy. Right, to have a formulate a detailed risk management policy. Now, to formulate a risk management policy, first you have to identify the risk, and once you identify the risk, then you need to mitigate the risk, and you say, in spite of the risk, how will your business continue? You understand? To formulate a detailed risk management policy, which shall include a framework for identification of internal and external risk specifically faced by the listed entity, in particular including the financial, operational, sectoral, sustainability, particularly the ESG related risk, information, cyber security. Oh, we saw, no, they made the cyber security subcommittee also. And a cyber security risk subcommittee also we saw in case of Infosys, or any other risk as may be determined by the committee. Then once you identify the risk, that is risk, then the response. So response means what? Mitigate. Measures for risk mitigation, including the systems and processes for internal control of the identified risk. Then in spite of the risk that there is huge competition, still how will you sustain in the market? So that is your business continuity plan. So first, for these 3 points, you need to formulate a risk management policy. Once you formulate a policy, now accordingly you need to design your systems. Then once you've designed your systems, you need to see that really whether this risk management policy is being followed. Then it's not a one-time task to design a risk management policy. It says review the risk management policy at least once in 2 years, MCQ. Review it at least once in 2 years. Then whatever the risk management committee is doing, it says keep the board of directors informed. And don't be in isolation. Keep the board informed, whatever work is being done by the risk management committee. Right. What was the 4th point in the mandatory areas of review of the audit committee? What was the 4th point in the mandatory areas of review by the audit committee? Look over here, 4th point, 1, 2, 3, 4 and 5. I'm asking you the 4th point. Appointment, removal and terms of remuneration of the chief internal auditor. Now in risk management committee, what does it say? Appointment, removal and terms of remuneration of the chief risk officer, if any. So this fellow is not compulsory, but if it is, then it shall be reviewed by the risk management committee, the CRO. And for audit committee, who we had? CIA, Chief Internal Auditor. Here we have the Chief Risk Officer, and the Risk Management Committee again will coordinate its activity. So it says, na, Risk Management Committee, you cannot have attitude. And you cannot say, okay, we are managing risk, nobody should disturb us. No, first you need to keep the board informed. And second, you cannot work in isolation. You have to coordinate your activities with the other committees. Right? So that is what? That is the role of the Risk Management Committee. What is the first role? Sit down and make a risk management policy. What to do for policy? Identify the risk, mitigate the risk, business continuity plan. Then according to the policy, design your system. Then review the implementation of the risk management policy. Then review the risk management policy at least once in 2 years. Keep the board informed. Also coordinate with the other committees. And also what does it say? The appointment, removal and the terms of remuneration of the chief risk officer, if any, shall be subject to review by the risk management committee. Are you understanding that? Risk management policy. Again, what they talk about? Risk management policy. Risk management policy. Right? First point is what? Design a risk management policy. Next is what? Implement the risk management policy. Next is what? Review the risk management policy at least once in 2 years. Right. Audit committee. Did it have the power to seek information from any employee? Audit committee, did it have the power to seek information from any employee? Yes. Similarly, does the risk management committee has the power to seek information from any employee? Yes. Can they take legal or other professional advice? Yes. Can they secure attendance of outsiders with expertise? Yes. So similar to the roles of the audit committee. Only audit committee ka first role was what? Investigate activities within its term of reference. That is not over here. Otherwise, all the points which were there in the powers of the audit committee, sorry, not role, all the points which were there in the powers of the audit committee are given over here also. And these procedures shall be periodically reviewed to ensure that executive management controls the risk through a properly defined framework, right? So all these procedures of the risk management committee will have to be periodically reviewed, right? So that is regarding the which committee over there? The risk management committee. Are you understanding that, right? Risk management committee. And then the last committee which we have over there is regarding the, do I have space over here? Okay, which is regarding the nomination and the remuneration committee, right? The last committee which we have over there, so that we have a comparative of all the committees, is the NRC, right? The nomination and the remuneration committee. We'll fit it over there only. And the nomination and the remuneration committee. How many committees we have? Audit committee, stakeholders relationship committee, risk management committee, and the nomination and remuneration committee. Again, this committee starting with the constitution. What is the constitution? Again, at least 3 directors. So now no member. Now it says 3 directors, all of whom shall be non-executive directors, and at least 2/3 shall be the independent director. Here though they don't mention only about outstanding superior right equity share. Here do they mention about outstanding superior right equity share? No. Here they what they say? At least 3 directors. All should be the non-executive directors, and at least 2/3 shall be the independent directors. Are you getting? At least 3 directors, all should be non-executive, at least 2/3 shall be the independent directors. Chairperson of the committee has to be an independent director, and chairperson of the company. Okay, next point, students get confused over there, right? Chairperson of the committee has to be an independent director. So chairperson has to be an independent director, and the chairperson of the company, whether executive or non-executive, can be a member of this committee, but he cannot chair this committee. So can chairperson be of the company be a member of this committee? Yes, but can he chair this committee? No. And obviously, see, what did we say? All have to be non-executive director. So if chairperson is executive, can he be a member of this committee? Then he cannot be a member also of this committee. You understand? No, because what does it say? Minimum 3 directors, and all members should be non-executive director. And now whom you are inviting? You are inviting chairperson of the company. Okay, you also come and become a director and the member of this committee. Right? So now can he become a director? Only if he is non-executive. But can he become the chairperson of this committee? No. Though he is the chairperson of the company, can he become the chairperson of this committee? No. He can only become a member of such committee. Are you understanding that? So what is the point over there? Chairperson of the company, whether executive or non-executive, he can only become a member of this committee. He cannot become the chairperson of this committee. He cannot become the chairperson of this committee. Okay. Then what is the quorum for the meeting? Two members or 1/3 of the members, whichever is greater, including at least one independent director being present, right? So now if I come to the quorum, right? What is the quorum over here, right? Two members or 1/3 of the members, whichever is greater, with at least one independent directors, right? So two members or 1/3 of the members, whichever is greater, with at least one independent director being present, right? So 1/3 or two, including at least one independent director being present. And how many times this committee needs to meet in a year? At least once in a year, right? So once in a year. So audit committee 4 times, risk management committee twice. And a risk management committee, how many times they had to meet in a year? Twice, with a time gap of not more than 180 days. That was for the risk management committee. And this particular committee is over there, stakeholders relationship committee and the nomination remuneration committee, they have to meet at least once in a year. What does it say? Chairperson, will he be present at the AGM? Yes, to answer the shareholder query. Now, was the chairperson of the audit committee and SRC also present at the AGM? Was the chairperson of the audit committee and the SRC also present at the AGM? Yes. Will the chairperson of the NRC be also present at the AGM? Will the chairperson of the NRC be also present at the AGM? Yes. Generally, what do they say? To answer the shareholder query. But this fellow, no, he has a luxury. He can decide who will answer the queries. Generally, audit committee chairperson, anybody ask query, he has to answer the query. Say stakeholder relationship committee chairperson, anybody ask query, he has to answer the query. But nomination remuneration committee chairperson, when he is attending the general meeting, either he can answer the query or he can decide who will answer the query. And also he can decide who shall answer the queries. Are you understanding that? And then obviously what you have over there is the role of the nomination and the remuneration committee, and whatever chart we are trying to prepare, right, it is already given over here. Okay, so see you tomorrow. Tomorrow we complete with the chapter of the SEBI LODR, and then also we will study complete with the chapter of the try to complete audit of consolidated financial statements. Bye bye.